Elon Musk's Tesla stock is one of the most popular stocks on the stock market. If you invested in Tesla stock just last year, you would have made an over 300% return on your investment. But that's history. We don't care about last year, we want to know about buying Tesla stock now. So for those who don't know, I've analyzed hundreds of stocks over the past couple of years, and I gotta say, I haven't seen one quite like Tesla. And I mean that in a good and also a bad way. Let me explain. You see, Tesla stock is absolutely unique. They have this opportunity in the market that you very rarely see. Their opportunity is the world transitioning to sustainable energy. You know, nobody is really denying that the Earth can't keep using all of its resources. We need sustainable options. One of the biggest examples that we can give with this is vehicles. We can't keep polluting the earth with fossil fuels. A much better option is to use electricity to power these cars. It's cheaper to run, it's healthier for the environment, it requires less services. Electric cars are just better all round. But right now, we don't use electric cars. Pretty much every nation and close to every person with a car has one that is powered by fossil fuels. This gives Tesla a tremendous opportunity to sell their electric vehicles worldwide. The demand for them in the long term is sky high. You know, as of 2018, more than 5 million EVs were sold around the world, and this number is expected to grow at high rates. So what Tesla needs to do is be that company that creates the best electric vehicle that sells the most cars. And at the moment, Tesla are that company. As you can see, their best-selling car, the Model 3, is by far winning that race of selling the most electric vehicles. If they can continue being this groundbreaking company in the EV market, the sky's the limit. I mean, it's the reason why you have investors with strong reputations going out on a whim predicting Tesla's stock price. Cathy Wood from ARK Invest said that Tesla could be worth more than $6,000 per share. Wood said this year that as we're looking at other auto companies, seeing how far behind Tesla they are, we're beginning to believe they might not lose market share, which is a huge change in our assumptions. She estimated that Tesla could be worth more than $6,000 over the next 5 years. But you know, it's not just Cathy Woods predicting these things. I mean, even big names like Ron Barron have come out and said their bull thesis on Tesla. Barron told CNBC recently that he believes there's 10 times more to go in terms of Tesla's stock price. Barron investment firm holds more than 1.6 million Tesla shares, and he remarked that he would like to have more money to purchase additional Tesla stock. You know, these investors like Barron and Wood, they see the huge opportunity for Tesla in the blossoming electric vehicle market. And essentially, they believe that Tesla will be the lead company that drives this transition from fossil fuel vehicles to electric ones. So at the core of Tesla's business is the 4 cars that we all know well. The Model S, the Model 3, the Model X, and of course the newest model, the Model Y. But there's a range of parts to Tesla's business model that people absolutely sleep on. First of all, we have to talk the Cybertruck. This is a revolutionary vehicle from Elon Musk. It looks like it's come out of some sci-fi film, or it's nothing like we've ever seen before. And the capacities that it has just dominates anything else in its class. It's got a monochrome exoskeleton made from 30X cold-rolled stainless steel. It's got armor glass for protection, because why not? And it's got crazy good traction control and torque. In fact, as I'm sure you've all seen by now, Tesla's Cybertruck is so strong, it pulled the Ford F-150 uphill. Anyway, so this is a whole nother market of cars for Tesla to dig their teeth into. You know, you've got the likes of Forbes estimating that this vehicle could add over $4.5 billion to the company's revenue by 2025. But it's not just the Cybertruck that people are sleeping on. Can we please talk Tesla insurance? For those who don't know, Elon Musk has now started up an insurance sector to Tesla, currently running in California, but expected to expand across the US over time. And if we take a look at how big this insurance business is, it's huge. The the United States automobile insurance industry has a market size over $280 billion as of 2020. If Tesla can grab a chunk of this market, it's going to significantly help their business model. And they've definitely got a chance of doing so. Tesla's insurance policies are up to 20% cheaper and sometimes 30% less than other carriers. Considering that they've got the information advantage as well through their car software, it's going to give them a good chance to enter this market. So you've got Tesla's core business with the 4 models, but you've got the Cybertruck, you've also got the Tesla Semi coming, you've got their insurance business, but don't forget they're an energy company as well. They have their solar roof and solar panel section of their business. The goal here is to create renewable energy for the home as well, not just your car. This energy side of their business is nothing to sleep on. I mean, people too often forget that Elon Musk himself thinks it might be as big as their electric vehicle business. He said this in late 2019 regarding Tesla's energy business. It could be bigger than EVs, but it will certainly be of a similar magnitude. At the end of the day, if you think about it long term, it's just a cheaper option for people to use natural energy like the sun to power their homes. Not to mention, it's also better for the environment. So why the heck did I tell you all of this? What does it mean? Essentially, it means one thing. Tesla stock has opportunity. The world is changing towards sustainable energy. There's no question about it. And if Tesla can continue the pattern of being the dominant force in that sector, there's a lot of money to be made. Investors like Cathy Wood, Ron Barron, they have a fair point in saying that Tesla stock could go to $6,000 or $10,000. There's no disputing that. But that's only one side to the story. And I'm about to tell you a side that very few people like to talk about. They're worried that people are going to dislike the video or unsubscribe. But for me, the most important thing is the truth. Tesla is a significantly risky company to be a stockholder in. Anyone who has been in the stock game for a while or understands valuing stocks knows that you can't dispute this. Let me explain why. First of all, we've got to talk about the economy. We've had a long bull market economy that's lasted over 10 years. Now, what stocks tend to thrive when the economy is up? Vehicle companies, because people have leftover discretionary income to spend on fancy cars. But this switches over when the economy does badly. Why? Because people don't have the money to buy vehicles. So car companies suffer when the economy is down. Now you've got a lot of expert investors like Ray Dalio predicting a recession to hit, or at least the economy to slow down. If this happens, Tesla is going to be vastly affected. Yes, they do well when people are earning a lot of money. They won't do so well when the economy dips and people start losing jobs, which we've already seen. So that's a risk with owning Tesla stock over the next couple of years. You really want that economy to be going strong. The other thing we need to talk about is the price tag. As Warren Buffett says, no stock is worth an infinite price. And Tesla is sky high right now in terms of cost. Even Elon Musk said on his Twitter, I'm sure with his tongue in his cheek, that Tesla stock is too high in my opinion. And if you buy the stock at high prices, well, you're taking a risk. The next thing you got to think about is competition. A bunch of those big name car companies that we all know well are getting involved in the electric market. The likes of Nissan, Ford, BMW, General Motors. They're going to offer increased competition for Tesla in the future. Now, I still see Tesla being the dominant company in the EV market in 5 to 10 years time. Nevertheless, increased competition is something to talk about. At the end of the day, Tesla is priced to grow, and if their business does not hit those growth targets, we could see a massive drop in price. So we have to look at Tesla objectively. First of all, they've got a great business model with an unprecedented opportunity of providing EVs to the world. If they take this opportunity, we could see 7x, 10x returns on our investments. However, they're risky to own too, and realistically we could lose 70, 80 or 90% as well. So be careful when you own Tesla, realize the extreme rewards and risks on either side, and make sure long term that you are emotionally ready to handle this volatility at either ends of the scale.